Hey, good morning, everybody. How are you? Welcome back. It's Saturday morning, and this is your Multifamily Unplugged, your number one Saturday morning radio show. And I always say that this is probably the only Saturday morning radio show. Hey, but we're live today. We're bringing you unscripted, raw conversation. Today, mine and Moose's guest is Savannah Arroyo. Savannah, you want to say hi real quick to the listeners?
Hi, everyone.
Hey, really glad that you're here. Hey, you guys, a couple of housekeeping things before we get started, okay? Remember this, we are live on Facebook, we're live on Clubhouse, and we are live on Zoom. So if you had an opportunity to get a front row VIP seat on Zoom, good for you. Hey, and watch out, because who knows what's going to start to fly around here, right? Listen, this week's episode is brought to you by My Core Intentions. This week we have a boot camp coming up. It's Understanding Multifamily. It'll be a full day virtual event. If you want to register for that, you can go to my website, and in the shop tab is a tab to register for that event. But it'll be full day packed with knowledge and information. So go wake somebody up, have them grab their coffee, get ready. We're going to dive in here in a minute. Make sure, please, I always ask to make sure you're following us on social media, LinkedIn, Twitter, Facebook, whether you are following My Core Intentions, me personally, or your focus guy. And today I'm going to throw Savannah in there also. Make sure you're following her because she just has a great presence out there. Hey, Savannah, why don't you tell us a little bit about yourself, your background, and what you're up to these days?
Yeah, definitely. So I grew up in Northern California. I went to Sacramento State University and I got my nursing degree in 2013. And I worked in a couple of different specialties coming out of college and was naturally kind of drawn towards leadership type positions. I was constantly taking on different process improvement, project initiatives within certain departments I was working at. And so shortly after I graduated with my bachelor's, I went back to school and I got my master's degree in nursing leadership and administration. So right now I'm currently overseeing multiple departments at a hospital here in LA. And I got into real estate investing at the beginning of last year. I was on maternity leave with my second daughter, and my husband and I were just looking at different ways to start investing and creating passive income. And really all we knew and all we were doing was putting 15 to 20% of our paychecks towards a 401k, a 403b. And it was money we couldn't touch until we were 65. And so we just really wanted to educate ourselves on alternative investment strategies out there. And real estate really hit home for us.
Well, awesome. Good for you. I know that I've watched you for a while. You're pretty loud on social media, which is kind of cool. And you got a great story around that. I love that. But hey, you know what? I'm bad this morning. I forgot to introduce my co-host. Hey, Moose, I'm so glad you're here. And you know what's funny is you didn't go out last night. So you've been up all morning because you called me early today. And I just, I was like, God, what is he calling so early for? Don't tell me you're not going to be here. So I was so glad to know that you were here this morning. So
yeah,
hey,
I'm on a different time zone, and I got mixed up. I thought I was an hour behind, but I was actually an hour ahead. So yeah, that's why you forgot me, because we've been talking for the last 3 hours. But anyway, yeah, no, good to see you, Mike. Savannah, really great to meet you, and just really interested in hearing about your journey. And I love to hear guests that don't come from a real estate background per se. We're in a different profession and, got into it and then are now like really getting traction, and you're doing some really great things, because a lot of our listeners, are people that are on that fence. They want to get into it, but they don't know how to get into it, and they have doubt and fear and confusion. And, when we have someone like you on the show that is obviously very successful in another endeavor or another area, and you're also succeeding in real estate. So I'm really excited about this morning's conversation.
Yeah, thank you. I'm super stoked to be here.
So how are you working on any current projects right now?
Yeah, so we just went under contract for our third syndication deal. We just got a really good deal flow up in Oregon with this young, hungry broker that we've been working with. And we were interested in exploring other markets, but we just kind of accidentally fell into Oregon. And then the more we've been there and been researching it and just hearing all the perks as a landlord that a lot of people don't think are there. Like a lot of people just hear Oregon and think rent control and you can't make deals work, and it's on the West Coast, so high price point to entry, but we're really getting good traction and getting amazing deals up there.
So Oregon has rent control. Talk about that a little bit. What do those metrics look like?
Yeah. So for the state of Oregon, they have the rent control and then the consumer price index, the CPIs, which I think was 0.02%. And then it was 8.9%. So for the year 2021, you can raise rents 9.1% as a landlord this year. But if a tenant moves out and you have turnover, you can increase rents up to market value. There's no restrictions on that, like there is in some other rent control areas. So we really haven't had a problem with it. And the deals that we're analyzing, like in our business strategy, we're never raising rent more than 8.9% in a year. That's very aggressive. So we're making our deals work. I mean, we don't underwrite that. We're not expecting to raise it 8.9, 9.1%, although we have been able to, like on our first syndication that we bought, as soon as we closed on it, our property manager went out and served rent renewals and increases to our 12 tenants on the 12 unit we did. And every single one of them signed it for a 90-day notice for an 8.9% rent increase. So it was already overseeing our projections, because I think we do like really conservative approach of like 4.5% and still making our deal work. So just underwriting conservatively and then working in the area to see really what rent control entails. Educating yourself on it is key.
Wow, that's really interesting. So are you buying affordable housing product, or are you buying market rate? What's your buying strategy? Talk about that a little bit.
We're buying primarily C class, B and minus in strong working class markets. I mean, the 12 unit that we bought has had zero delinquency since the beginning of COVID. So it's just really good employment variation within the market. And it wasn't one specific sector that got hit pretty hard through the pandemic. So, and then the people are still paying rent in the market we're investing in. And we started investing in these deals during COVID. So those were questions that we were asking our property manager before we even started putting out offers on these deals. Like, what do your other buildings look like? What sort of delinquency rates are you seeing in all the units that you manage? Like, what is this market looking like in terms of tenants paying the rent? And really doing your front work on those type of questions, asking your property manager gives you kind of the understanding of like realistically if you're going to be able to make a business strategy work in that market.
Man.
Do you have anything going on in LA? I mean, what do you own any property in LA or?
We don't. No, we own single family homes over in Georgia and then just doing the multifamily deals up in Oregon. I know LA is flagged for rent control too. And a lot of people, when I told them I started real estate investing, suggested I don't do it in our home state or home city of Los Angeles, California. But the more I've gotten into real estate and talking to people, there's a lot of people here in LA that are making it work. I mean, it's just the appreciation down here in LA. We've seen it in our primary residence that we own. It's a good market.
Yeah, I used to live in San Francisco, and one of the, and I used to be a banker too, and the cap rates in San Francisco, but that's a totally different market. It's a very, a lot of people don't realize there's only 7 miles by 7 miles. It's the peninsula of San Francisco, and you can only build on 40% of that. So, it's, I mean, I remember there were Six Flats trading for, like $2 million, which is outrageous. When things in Chicago were you could buy a Six Flat for 400,000, so, and that was one of the reasons I moved back to Chicago was the real estate market out there. I mean, for $1 million, you'd buy a postage stamp in like, Palo Alto or something. So, but yeah, it's definitely a different market, but I'm interested now. Did you have a connection in Oregon, or how did you end up in Oregon?
Yeah. So my parents live there. So my parents live in Oregon, and I didn't grow up there, but they moved there after my sister and I graduated from college. And we were really looking up there just to kind of get experience running numbers. Like, we were really curious more than anything. And when we started doing underwriting, we wanted to get as much practice as we could, just doing deal after deal after deal. And it's good when you start learning how to underwrite different markets. So you're taking into consideration all the differing numbers that go into play. I mean, tax, what you're able to raise rents, property management's very, very drastically across the country. So we were really just doing it to like really practice our underwriting. And then we stumbled upon these really good deals. And because we have boots on the ground up there with my my parents, we just have been going full force into it.
Is your sister involved too? I mean, is your sister also?
No, my husband is.
Gotcha. Okay.
So Savannah, is everything you do on the GP side or do you do any LP investing?
We're primarily GP. And that was because as we started getting into it, we're not accredited investors, my husband and I. And so it eliminated us getting into a lot of deals. And then the more we started researching it and kind of what it took to take down a syndication, and just, I come from a strong operational standpoint within healthcare management of what I do for my full-time job. And we were just looking at kind of all the moving pieces and what it took to do these real estate deals. And we were like, oh, we can do this. This would be fun. And we were just super drawn to it.
Hey, where at in Oregon?
So my parents live in Roseburg. We have a property in Roseburg and then one on the coast in North Bend, Oregon, like Coos Bay area. And then we're under contract for one in Pendleton, which is northeast.
So I have a friend who used to live in Coos Bay. And here's my memory of Coos Bay. I was there and there was a ship liner in the harbor. And it had a mountain high of sawdust from the lumber mill, right?
Yeah.
And I said, hey, what are they doing with that? He goes, oh, they ship it across to Japan. They make press board out of it and they ship it back. I said, and they ship the finished product back? He said, yeah. I said, why don't they just make it here? He says, because it's cheaper to ship it both ways than it is to make it in the US. I was like, God, that's crazy. That just goes to show you, though, our pricing and dynamics. You go back to the gas prices. I remember when gas was $6 a gallon in San Francisco, and it was, $4 everywhere else, right? Mm-hmm. So a pricing disparity is nuts. Hey, I have a ton of questions. Hang on, let me just ask one more, Carl, and then you can go. How do you vet a broker? So you said you found this young, hungry broker in Oregon. How do you vet a broker to work with?
Well, okay. So starting off when we had zero experience trying to get into these syndication deals, that's kind of a big hurdle of trying to create a relationship with a broker and them take you seriously and send you good deals with them not knowing whether or not you can close, right? So you'll have brokers who, when you start that conversation with them, they'll ask you straight up, like, how many units, like, what does your portfolio look like? And then if you're a newbie, it's a little bit hard to kind of cross that hurdle and get the good deal flow coming in. So with the specific broker we met up in Oregon, he never really asked us our experience. And because we were like super specific on the buildings we were looking at, like we were like, okay, we're looking for 12 to 20 units, strong value add, this price point. Like we were super specific. So I think he just thought like, oh, okay, like they've done this before. They know what they're doing. We told him we have the single family homes over in Atlanta. So he never really asked. And from right off the bat, took us seriously and was sending us really good deals after deal. And then when we got that first one, the 12 unit, we worked through on it. We jumped on it right away soon as we did the underwriting and saw that the numbers were so good. And so we moved forward with it. And then when we closed on that, then it just, he started sending us more good deal after deal.
Yeah. That reminds me, Mike, of the conversation we had last week about, for people that are just starting out, find your value, right? Put your best foot forward. Just like you said, Savannah, you guys didn't have a ton of experience, but you walked into that meeting, you had your act together, right? You knew what you wanted. You knew where you wanted to buy it. You probably had some, your financing, at least in your head, figured out, right? You stepped into that meeting, as if, right? As if you had all that stuff done. And, we talk a lot about mindset, on this show, because we're both, Mike and I are firm believers. So you can have the best market, the best property manager, the best tenants, the best property, the best financing, but if you don't have the right mindset, you're just not going to maximize. So for people that are just starting out, get your head straight. You know what I mean? And figure out the value that you bring to every conversation and every relationship that you have, because in essence, you've developed a relationship with this broker. Right. And it's symbiotic. I mean, you get from him and he gets from you, right? You're closing deals. He's earning his commissions. He's like, oh, Savannah, I would love this deal. Right. So he's bringing you deals. So it's a two-way street. And my point is, you've got you walked in there with the right mindset. Right. And that's why the person probably was like, oh, this person's a pro, even though you may not have closed, 10 deals yet. So, for people that are just listening, really, really, pay attention to that, because, even if you've never done a deal before, I hate to use the word fake it until you make it, because I don't really like that, but put your best foot forward. You know what I mean? Just tell people what you're up to. Don't be a poser, and just be authentic with them. Right.
Yeah. Fake it till you make it is honestly what comes to my mind too, but not that we are like faking it. But I mean, I have, and I'm sure you guys can relate, like experience throughout my career. I've managed departments. Like my last job, I moved into the cath lab specials and GI lab, and I have zero experience as a nurse in those units, but I'm a very strong leader and I'm very willing to learn. And my manager saw that. Even though I had no experience in those units, he saw that I would be able and willing to really catch on and learn and develop as a leader. And so really your initiative that you take and your ability to kind of learn and keep growing is almost stronger than any specific experience that you have in a specific sector, for sure.
Yeah. And that's your mindset. You come in with you probably, you and I just met, but I'm a good, I can sense that you bring that mindset to everything you do, which is really important. You know what I mean? And I think that's just key. So keep it up.
Thanks.
So let's back up for a minute. You had mentioned that you were really like the B- deals in the working class neighborhoods. Mm-hmm. So that's obviously part of your buying strategy. And I want to know why that product class. Is it based on market? Is it based on price point? What's it based on? And then unit size.
I think a little bit of everything. So definitely price point and the markets that we're investing in just really kind of trend towards those property buildings. And the B class C, those we have really seen the ability that they've been like mismanaged by previous owners, that this specific class and the markets that we're looking at just has so much opportunity to add value in some of these deals. Like we're seeking and kind of attracting different sellers who just have owned this building. It's kind of on the back burner. They're investing out of state and they just have all these reasons that we've seen as we're buying these properties that these properties have been mismanaged. I mean, there's huge opportunity to add value through raising rents, controlling some of the expenses, going in and having a very specific business strategy that the seller didn't really have. They weren't super motivated like that. So we've just seen a huge opportunity in that respect with these specific property classes.
What price point are you finding in that market?
Our 12 units sold for $1 million, our 18 unit 1.375. So, I mean, not ridiculous. Atlanta, Georgia was originally like cheaper, but I can't even find those over there for that price per unit. So I don't know. It really just depends what market you're in and what kind of capital you're going to be able to raise for these deals.
Yeah, that's interesting. How about how involved is your husband in the business, and what, do you guys have separate roles? Are you real good at something? Is he better? How do you guys work like that together?
Yeah, we've definitely split up the business now, but when we first started in with real estate investing, we actually signed up for a coaching mentorship program. And that was really because we work full-time jobs and we were going full force into creating a business with this. We were investing our own money in the deal, our friends and family's money in the deal. And we wanted to make sure that we were doing everything as correctly as we could, right? Like by the book, our underwriting, we were working with someone with 20 plus years experience that could look at our underwriting and be like, okay, you're considering all possibilities and options. Like this is where you could potentially go wrong. This is what you need to consider. So we had that support as we started working through these first few deals. And that was huge. And going through the coaching program and kind of taking down that first syndication, my husband and I went through every step of that process side by side. So we were going on our coaching calls together. We were doing the underwriting. We did the due diligence. We were doing investor calls together, calls with our lawyers together, property managers. It was very time consuming of trying to coordinate with both our schedules and other people that we could be taking all these calls together. And we really wanted to learn every step of the business, taking down a syndication and what all moving pieces came in, because we were the sole general partners on the deal. And after we did that first deal, then we naturally kind of gravitated towards different aspects of the business. My husband's the number guy, so he really took charge of the underwriting and the asset management. So he has all the calls with our property managers moving forward. And then as we started deciding like we need to start raising capital, building a brand, I really took over over the marketing and the investor relations. And so now I'm kind of the face of the business, going out there and creating the connections and the opportunities and the partnerships through relationships.
Yeah, nice.
So, you know what? I'm a huge advocate of coaching. You know what I mean? And, you know, I made a ton of mistakes. I mean, in the first 5 years, I think, of my investing, I bought like 22 buildings. And I'll tell you, what you just talked about is so important, because if I would have had somebody, you know, if I would have taken the course that you took, right? And I don't mean the specific training, I'm talking just the route, right? And had somebody look at my deals, have somebody hold my hand, have someone give me the templates, right? The scripts, all that kind of stuff. I would have saved tens of thousands of dollars, you know. And I don't know what you invested in your coaching. I know what I've invested over the years in my coaching. I mean, it's you know, $250,000 in training, you know, over the course of everything I've ever done. And it's well worth it, because you just, you know, there's an old saying, right? You can try to save money by investing your own time, or you can save time by investing your money. And it's just really great to hear. And by the way, most of our guests say the same thing. You know, most of the people that we have on the show are like, oh my God, you know, I paid $10,000 for a training program, and it was the best money I ever spent, because, you know, I saved double that on my first deal. You know what I mean? And you know, it's Mike and I are huge advocates of coaching and training, because, you know, and we don't have time now, but he's got a story about, you know, some guy gave him a cassette tape that he listened to over and over and over and over again, and it really made a difference for him. So that's just really good advice.
Yeah. And not even really just, I mean, the whole aspect of making these expensive mistakes, right? Like making a $30,000 mistake, or investing that $30,000 in a coaching program where now you're in the position where you can potentially eliminate that mistake, was a no-brainer for us. But not even just like the amount of money that you can save, but the confidence to take that first step was like the biggest thing for us, because I don't think if we had a coach, we would have ever maybe felt confident enough to like submit our first offer on a multifamily deal. Like, but with a coach behind us, we felt we had the confidence of like, okay, we have a coach telling us this is a good deal. This is a good deal. And we're going to submit an offer and start moving forward on the process. So that piece was,
you know, and you bring up a good point. You know, fear, doubt, and confusion, right? I mean, when you have a coach, you know, it eliminates the fear, the doubt, and the confusion, because they can say, oh, do this, don't do that. Or, you know, I did that before. And that's the intangible thing that you just pointed to, right? That intangible thing that, you know, it's like riding a bike. You know, once you expand yourself like that, and once you grow beyond that fear or that doubt or that confusion, you never go back to where you were. So, you know, again, and that goes to mindset, and it goes to just building the confidence, because, you know, here's the other thing. Every guest that we've ever had has always started with one property, right? We all started in the same spot. And it's until you close on that first deal, or you finance that first deal, or you syndicate that first deal, it's like, oh my God, right? But then when you do it, it's like, I can do this, you know, and there's a lot of people that that need, you know, that are really looking for that encouragement.
You know, that whole coaching conversation is just, and I like what you said, Carl. It's very boy, you just said something, and I totally went blank on it. But it is so interesting, because you don't know what you get from it until you look back, right? You hesitate joining coaching, you hesitate signing up for it, you hesitate making the investment, but then all of a sudden, I know when I wrote my first check for coaching, I paid $1,000, and this is 25 years ago, right? And it was for one-on-one coaching. And all you got back then was one 30-minute phone call a week with a coach, right? And I didn't know who that was going to be, but my business changed 20% a year. It grew 20% a year as a result of that. You know, it's why I sold 125 houses a year. It's why I raised $18 million in 30 months, because of coaching, right? And Savannah, I think that you're a great example of that. You guys are doing the right things, because look at how your progress is, right?
Yeah, and it's a mindset thing. You know, you can try to, and I did this. This was one of the mistakes. I tried to do it all on my own. You know, and I fell flat on my face. I mean, there's not enough time on the show to talk about all the mistakes I made, but, you know, it took me making mistakes and getting beat up and getting bloody to really change my mindset. And I didn't have to go through that. You know what I mean? And when you come into it and say, you know what, I am going to, instead of taking 10 years, I'm going to invest a couple thousand or 5,000 or whatever. And you're going to save that time. And which is a more valuable asset? We all know time is our most valuable asset. You can replace money, but you can't get your time back. So I think it really starts with having an open mind, being willing to take that risk, finding the person that resonates with you, and then jumping in and don't look back.
Mhm. Yeah. I think it really comes down to leverage too, of just leveraging other people's skill sets. And that was one of the biggest things when we switched from single family homes into multifamily, just the ability to create these deals as a team sport. Now you're coming in and working with key KPs, key principles on your deals, and structuring these deals to create a lot of different relationships and influence. And it's not just you going out there and taking on these deals, you're creating these mutually beneficial relationships and leveraging other people's skill sets and leveraging other people's ability to bring capital to a deal. And it becomes this team sport in a way that makes it so that you do have to make that mindset shift.
And it can be fun.
Yeah.
It can be fun. I mean, you can actually, you meet great people. It can be fun and exciting. So cool.
Hey, let me reset the room real quick if I can. Hey, if you're joining us this morning, you are live on Clubhouse. This is Multifamily Unplugged. We're live on Clubhouse. We're live on Facebook, and we are on Zoom as well. And we're joined this morning, my co-host and I, Moose, are joined this morning by Savannah Arroyo, and we are talking multifamily. And boy, we're getting a little deeper than we normally get on Saturday morning, huh, Carl?
Yeah. All
Hey,
right.
Savannah, I wanted to ask you about structure, because it's been a while since I've actually syndicated a deal, right? I had owned and operated about 4,000 units, but it seems to me that everybody is syndicating deals differently today. And here's why, because you don't have to have everything. When I was syndicating, you had to have everything. You couldn't bring all these partners to the table. Now you can bring capital to the table. You can bring experience to the table. Talk about that, how the strength in your partners and your network and team building, because that's so important.
Yeah, definitely. And I love that you bring up that concept in the terms of like, maybe that used to be the way, but now everyone's doing it, because it makes it seem like, okay, I can definitely do this. If you're coming out there and just creating relationships and partnerships with people that you work well with, or can kind of just bounce off each other's skill sets, it creates these opportunities that it's like, there's no reason you can't get it done, get these deals done. And yeah, so definitely for our deals, like coming in, we needed KPs on our deals, because my husband and I just didn't have the net worth and liquidity when we were first getting started to kind of make these deals happen. So we had to structure partnerships that way. And originally when we were coming in on these deals, we're wondering like, okay, how easy is it to create these relationships? Like you almost come in, I mean, not knowing, us thinking that they're like one-sided, right? Like we need a KP, but these KPs that are coming into these deals, it's a win-win for them, because they're not having to manage anything. They're really not having to do anything. They're just bringing net worth liquidity to the table on the deal. And then they're getting a portion of the deal. So the way that multifamily works of just creating these mutually beneficial relationships is so amazing. Even coming in thinking like, it can feel a little salesy trying to get people to invest in your deals, right? When you're doing syndications, but when you remind yourselves that you're bringing these people a huge investment opportunity that they might otherwise not have the access to. I mean, especially me working with healthcare professionals and people who don't have the time and energy to invest in these deals, but they want to receive these amazing rewards that are, I mean, better than the stock market or the majority of other investment strategies out there. It's like a win-win relationship. We're bringing them this investment opportunity, and then they're providing us the capital to take down these deals. So the amazing thing about multifamily is the creativity that you can get to structure these deals. I know for me, I'm very like step by step. And when I was going through the process of thinking like, okay, this is exactly how we need to structure the deals. This is what it needs to look like. And then as I've gotten more experience in it, I realize how fluid these transactions can be, and it creates great opportunities.
Yeah.
You brought up another good point is, you don't need to look way beyond your circle of influence, right? I mean, you're in the healthcare business, the medical business, if you're a contractor, look within your circle of influence, what other contractors might want to partner with you on deals or invest in with you. If you're in law enforcement, right? Mike, we had a firefighter. Remember the firefighter that we had on, that he was the first guy in the firehouse that bought a property. Everybody was making fun of him, and now they call him, they're coming to him for investment advice because, like I said, you don't have to go way outside of your circle of influence to find opportunities and to bring that value, to other people, because you've talked on it many, many times. And I know, Mike, you're huge on this. It's a relationship business, right? So how can you develop relationships, that within your own circle of influence, to bring opportunities and bring value to each other? Because I believe, I'm a firm believer, that's where these things happen. It's almost like, real estate's just the vehicle, it's who's in the vehicle with you, who's in the car with you, right? Or whatever. And that's, that's a very important point, because, you've done it right within your sphere of influence.
Yeah, I think that was super important for us because it was intimidating thinking like, okay, we're going to have to go out and raise capital for these deals. Like it's a part of the business. And that part of like marketing ourselves and doing that felt like super salesy, kind of like I said. And I didn't want to do that. I had no interest in coming across as a salesperson. But then when I started realizing and working with kind of a marketing coach of like, you can brand yourself and be so genuine to who you are and use the relationships and the skill sets that you have as a person, as a nurse, going in and creating these conversations now focused solely around real estate. For me, that's been a huge shift of like, now I get to do this and feel super genuine and transparent to who I am. I'm not doing anything that's like out of the box or coming across or talking to people that is kind of, just not my norm. I'm able to create these relationships with people that I have the trust factor already built into because I'm a medical professional. So that's been very instrumental, especially in building my brand, the Net Worth Nurse, and still doing it in a way that's to my character.
I think that what you said is so true. And whoever your coach was that gave you that insight was really smart, because here's what I like about your whole process, right? Is I called you and I said, hey, you have a podcast. Can I get on your podcast? And you said, oh, I don't have my own podcast. I go on everybody else's podcast and I repurpose the information like it's mine. So what you've done is you've really got this presence in the marketplace, which I think is so cool. People are attracted to that. Oh, I need to go listen to the Network Nurses podcast.
Mm-hmm.
And, you find this other episode. So I think it's brilliant what you've done. It's great. Right. And I just wanted to make another comment about coaching. On Thursday this past week, I had Brian Burke from Praxis Capital on my coaching call as a guest, and he just talked to the group as far as how he got started in the business. And what was interesting, and here's a guy, they own, I think, like 150 million in assets under management right now, and have like another 100 million that are getting ready to close, right? So very large structured company. But what's interesting is he said the same thing. He goes, when I got into this business, I didn't have anything. He goes, I had no money. I didn't know where I was going to do any of this. And just a few short years later, look what happens, right? And you're on the same track. So I just think that that's really interesting. People need to listen to that and pay attention to it and really get those negative roadblocks out of their mind.
Yeah, definitely. I think the imposter syndrome was a huge thing coming into this space of feeling like I don't belong. There's so many people out there doing it. Even when I was going to go full force with the Net Worth Nurse and cater specifically to medical professionals, I started researching it and I'm like, oh, there's already other doctors out here doing it. I'm not going to have space. There's not going to be room for me. People have already monopolized on it. And then that was just like a huge limiting belief. I mean, a huge imposter syndrome getting in my way. And as I started realizing and I just started reaching out to these people, like these doctors that were doing it. And I'm like, hey, like, how did you get started? How are you getting in front of your avatar? Like, what strategies are you using to specifically cater? What has worked for you? What hasn't? And I think my ability to just kind of be a straight shooter and reach out to people has provided so much opportunity for me. I mean, I still have people reach out to me now who are like, oh my God, how are you getting on so many podcasts? Like, how are you doing this? And I'm like, well, what do you mean? I'm just messaging people and asking if I can be on their podcast. Like, I'm literally just like cold calling people to be on podcasts. And that, like, people don't even conceptualize that of like, oh, well, yeah, if you want to be on someone's podcast, you reach out to them and ask them if you can be on their podcast. So for me, like learning from other people for sure out there, like doing what I want to be doing and going where I want to be going, even with my brand building, I've like read Gary Vaynerchuk's, crushing it, and just kind of like the concept of branding and building a platform. Like me, that's my path. And I'm like, okay, he has this book, he's laid out exactly how to do it. And I've just been taking tips from there. And that's kind of what I've been doing. And it's allowed me the opportunity to just like, not to reinvent the wheel, people are already doing it, just learning from them.
Yeah. So look, can I ask you a question? I have children as well. They're teenagers and they're starting to get into this stuff. And and it's so funny because it looks like this is all new stuff, but at the end of the day, real estate and marketing, it's been around for a long time. So, you don't have to reinvent the wheel. You know what I mean? Bob Proctor was one of my mentors, and he always used to say, find a place, find a book, and find a person, right? Find a place where you can be quiet and settle your mind. Find a book that relates to you, whether it's the Quran or the Bible or Think and Grow Rich, which happens to be my book, and find a person, that resonates with you. And, just if you just focus on those, you don't need to read, I know people that read, 1,000 books. I'm like, just pick one or two that resonate with you, right? And stick with that. And, we, as human beings, we tend to want to recreate the wheel. There's no need to do that. Find somebody that's done what you're doing and connect with them. Bob always used to say, if you copy someone in school, it's called plagiarism. If you do it in business, it's called being brilliant, right? Just mirror them, right? Find somebody that's doing what you want to do and mirror them, right? And so, yeah, and if you listen, I just met you, but here's what I know. If I can do it and you can do it, anybody listening can do it.
Yeah.
Would you agree with that?
Yes, I do. And I love how you mentioned, you have teenage children that are like kind of coming up, learning about this, like the strategies haven't changed. I think the tools for it have, like the social media aspect of, now we're doing Facebook Live and Clubhouse. I'm not even on Clubhouse yet. I should probably get on it, but just there's so many different avenues to kind of broadcast and push yourself out there. And you just need to learn which ones work for you. It was very overwhelming when I launched my brand of like, I never had Facebook before. I wasn't really on LinkedIn. But now I have a Facebook and a LinkedIn. Instagram's kind of always been my thing, but YouTube definitely wasn't. I didn't want to create videos, but the marketing coach I was working with was like, you need to get in front of a camera and talk about real estate concepts so people can feel your personality and how genuine you are and who you are as a person. They will invest with you because they trust you, not necessarily with the numbers. People are out there doing all these sorts of deals. And that was kind of like a big roadblock for me of like the imposter syndrome, not getting out there. But then I realized like even the 6 different doctors that are out there doing, similar things to me, one of them appeals to me more than the other 5. And that's because of his personality, what he's doing, how he comes across, how he talks. And I know that me as an operator in these deals, there's tons of other operators out there doing exactly what I'm doing, maybe the same deals. But to me, my personality and how I am and how I communicate with people will appeal to a different audience than someone else. And I'll attract those investors. So it's not really kind of a limiting belief concept of like, scarcity mindset. There's not enough out there. If you just realize, you can create something for yourself, you'll be able to achieve more.
Yeah. Hey, how about financing? What kind of financing are you finding out there today? And as a second question to that, where do you see the markets going with all this over the next 12, 36, 60 months?
Well, okay. So I've been doing local credit unions for the 3 syndication deals I did. And then I used a bank for my single family home. So I've gotten in on those deals fairly easily. We've had to kind of do some different structures of like the credit unions want a certain amount of ownership signing on the loan when you're syndicating a deal out. So we've brought on a couple of LPs as guarantors on the loan, and then they get an extra percentage, which kind of goes back to our conversation of like all the different ways you can structure these deals. When it comes to Fannie, Freddie, and agency debt, we've been having some difficulty in terms of having the years of experience and the amount of deals to get done before you can start qualifying for that type of debt without bringing a sponsor in. So it'd be kind of the same thing. You would just have to structure and leverage other people's experience to use that kind of debt. We just haven't been there yet. We haven't done agency debt. We might for our next deal. And then in terms of kind of how the market's trending, I'm probably the worst person to draw conclusions about stuff. I swear when COVID first started, I was like, there's no way it's going to make it past summer 2020. Like, absolutely not. When people were talking about schools closing in fall, like in springtime last year, 2020, I'm like, there's absolutely no way. And then when I heard Disneyland close, I'm like, this is no joke. This is serious. So I don't really know, but I see interest rates, I guess, I think there's always deals. People will sit around on the sideline and wait and wait and wait for the perfect time. But the more people I've talked to and the people that I see out there having success are taking action regardless.
Yeah. It's the old adage, right? The best time to buy real estate is now, right? Or the best time to plant a tree is now. You know what I mean? So but you point to something that's really important. And Mike, I don't want to minimize your question because it's a very good question. You know, what's the predictions? You know, however, no matter where it goes, right? No matter what happens, you know, you're going to keep chugging along. You'll figure it out, right? And you'll shuck and jive or whatever you want to say, to stay in action. And for a lot of people, they sit on they sit on the sidelines and they wait and wait and wait. And then, 5 years go by and go, gosh, meanwhile, their brother or their sister or their college roommate or whatever now has 10 properties, so action is such an important point to I think what you were just saying.
Mm-hmm. Yeah.
Okay. Well, hey, we're winding down. Any final comments, thoughts? I know I'm on overload this morning. How much information can one guest pack into 35, 40 minutes, right? So that was great though. You said a lot of things that were, number one, very inspirational, right? And I hope that the listeners this morning, we've had a number of people on and off on Facebook and some great, thoughts from people, but I just want to say that, the whole inspiration piece that, hey, you know what? Anybody with a little bit of desire and passion can go do this or do something that they want to do in their life. And Savannah, you and your husband are a great example of that. And my hat's off to you guys. Keep doing what you're doing.
Yeah.
And Savannah, how can people get in touch with you? And then Michael, after she gives that, I want to make one comment. So how can people get in touch with you, Savannah?
Yes, the Net Worth Nurse. So you can find me under the Net Worth Nurse on all social media handles. So that's Facebook, LinkedIn, YouTube, and Instagram. I've gotten pretty heavy on social media just so people can get an inside look of what I'm doing. That's my favorite way of even connecting with other investors and kind of seeing who they are as a person on the inside and outside of real estate. And my website is the Net Worth Nurse. I love connecting with other people. If you're remotely interested in real estate, I would love to schedule a call with you. Please reach out.
And then you're a regular guest on podcasts. So if somebody was looking to book you as a guest, do you do calendar or how do they do that?
Yeah, Calendly. I usually just get different not invitations, but applications, pretty much. Like most podcast hosts have applications now. So yeah, I'm definitely looking to my goal is 100 podcasts this year. So I'm working my way towards that goal.
Awesome. Good for you. And then Mike, listen, I want to give you a plug because, for anybody that's listening, Mike is doing a boot camp. Is it this week, Mike, or when does the boot camp start?
Yeah, it's Thursday, Carl. Thank you.
Yeah. And so listen, if Michael was not on this, and I tell people all the time, I've known Mike for a long time. This guy has forgotten what most people haven't learned yet. And I've done a lot of deals as a banker. I've done a lot of deals as a realtor. I know a lot of people, and Mike is probably top 5 people I know with regard to multifamily. And I'm not just saying that. If you have any interest whatsoever in getting into multifamily or real estate in general, because Mike doesn't always only talk about multifamily. He talks about networking. He talks about, all the other aspects, financing. He talks about analysis, his book, Exit Strategy. So, I really want to encourage you, if you have any interest in getting into real estate, don't get off the fence, get into Mike's program. I'm sure, I don't even know how much it costs, but whatever it costs, I'm sure it's ridiculously an incredible value. So, get connected with this guy, because a year from now, not only will you be thanking him, you'll be thanking me. You'll say, hey, Moose, thank you for pushing me, because if I would have had a guy like Mike in my camp, 25 years ago, I would have saved tens of thousands of dollars on every deal. So anyway, I just wanted to say that.
Carl, you're so kind. I appreciate that. And I hope you take heed from Savannah this morning and about the whole marketing thing. She's marketing everywhere as the network nurse or net worth nurse. And just think about that with your focus guy. So
Yeah.
I just want to put that out there. So, but you also, you know, as an accolade to you, teach really great principles, you know, that are priceless and designed, you know, from the beginning of time. And I think that you do a great job with that as well. But
Are you calling me old, Mike? Are you saying I'm old? You're older than I am.
well, yeah. I won't go there with you, but okay. We won't do that this morning. Hey, Savannah, thanks for being here.
Thank you guys. It's been a lot of fun. It's my pleasure.
Yeah, thanks for helping bring some things into perspective for me and for our listeners. And it's been great. And I look forward to continuing to stay in touch with you and see you around and, you know, keep learning from you. So thank you.
Yeah.
Yeah.
Definitely.
Thank you, Savannah.
Thank you.
Carl, as usual, it's always a pleasure. I appreciate you, your insight and your excitement. So we will look forward to seeing you next week. Thanks everybody for being here, and we'll be back next week on Saturday morning. Have a great weekend.
Bye.